Buenas tardes, hoy tenemos la suerte de tener con nosotros a Stuart Rumbo, director de inversión de Asia-Pacífico en Fidelity. Bueno, pues vamos a adentrarnos un poco a ese panorama financiero y de inversiones en Asia y con él pues vamos a comentar toda esta situación en Asia-Pacífico. Good afternoon, Stuart.
Thank you.
I would like to ask you, knowing all this financial and investment landscape across Asia, a region that continues to capture global market attention, is the recent rebound in Chinese equities the start of a real recovery, or is just another short-lived rally that we're living?
Yeah, it's a question that I get asked most often right now, and I think there are reasons to believe that it can continue. I think if we just take a step back and look at the setup first of all, we came into this year with very attractive valuations. I think a lot of bad news was priced into the market in Chinese equities, and what we've seen, of course, since then is perhaps incrementally positive developments. The government have been committed to addressing some of the major concerns around consumption and deflation. We had the DeepSeek moment, which reminded us of Chinese innovation. We've had various policy support measures, and that's sort of brought back some animal spirits among Chinese investors, which has led to the rally. What's been interesting is against that environment, the macroeconomy exports have been okay, but it's not been fantastic. Property is still depressed. Sentiment amongst consumers is still quite muted, and that's meant that in some places earnings haven't been great. It's been tech that's really led the earnings. So I think we need to see earnings broaden out for this to continue, but there's lots of exciting investment opportunities, lots of companies with innovation, pricing power, growing their businesses, which I think can fuel the rally further into the rest of the year.
Right. And with all these opportunity and investments and everything, like where in Asia do you see the strongest long-term growth stories right now?
Yeah, I think there's a couple of perhaps obvious areas. I think the first one would be that we're really starting to see the adoption of AI justify some of the big capex and the big spending that we've seen from particularly the US mega cap tech companies, and that adoption and the lower cost of AI is really helping to translate into tangible outcomes for companies. There are travel companies that use it to help improve their service to customers. There are tech companies using it to improve their adverts, targeted ads, and that's really feeding into earnings. So I think AI, the continued investment around that theme will provide opportunities, but perhaps that's moving more to the software and the use cases and maybe less so to the infrastructure, although I still believe that a lot of the chip companies make good investments in the long term too. And the other area I would say, which is perhaps overlooked, is also the consumer space. So China, I mentioned, has been difficult, and perhaps other parts of the consumer sector in Asia has also been under pressure. But again, you shouldn't necessarily overlook all of the opportunities. There are interesting things happening, in under-penetrated areas like sportswear, people becoming more healthy. That's growing companies' earnings with those companies able to really resonate with their customers. Cosmetic companies, we still see some premiumization in areas like beer, for instance. So yes, it's a difficult consumer environment, but there are still companies with great propositions, great brands that are growing market share and have pricing power.
Right. And what risks should global investors keep in mind when looking at Asia, especially in this 2025?
Yeah, it's an interesting question, because I think we, again, look a lot at the tariffs and the external environment, and I do think that has, it's been a key risk for us as investors to pay attention to, and I think we need to continue to look at developments there. We still have trade deals to formalize between the US and China, but progress looks like it's being made, particularly with the news around things like ByteDance. India, we're watching carefully. We'd like to see a trade deal there. Obviously, that would help to improve sentiment. And generally speaking, what's happened is a lot of these tariffs have also brought forward some investment and consumption, which perhaps then means that it's brought forward from the future and therefore is not necessarily available for companies to tap into the coming months. So we just need to be careful about how much is brought forward. Nevertheless, I do think we're probably through the worst of it in terms of tariffs. So I'm now looking towards things like the US economic environment and growth there for the direction of travel for Asian economies, just more broadly on the growth impact, and then domestic growth drivers and domestic consumption. I'd like to see, some of the policy support measures, the interest rate cuts start to feed into a better consumer environment in Asia.
Definitely. And how are reforms and policy changes across Asia are influencing investors' confidence right now?
Yeah, I've mentioned a few. We've obviously seen either policy support measures from the fiscal side in places like China and also on the monetary side as well, interest rate cuts from places like China, more recently Indonesia, and we might see some of those measures continue. And I think that's been a factor that's helped to improve investor sentiment and the outlook. But one area that I think doesn't get enough attention is policy measures that help to support shareholder returns and corporate governance. One area in particular we're looking at is Korea, where their Value Up program introduced by the government is really starting to have tangible benefits on the shape of corporate boards. And we need to look out sort of 6 to 12 months to pay attention to those. We may have, greater power as minority shareholders, which will eventually help to improve return on equities, shareholder returns through things like higher dividends and buybacks. And I don't think that's being fully appreciated by the market right now.
And Stuart, why should global investors keep Asia in their portfolios right now, nowadays?
Yeah, I mean, it's clearly a huge part of the world that can't be ignored, whether you look at population or its contribution to GDP growth. It's just an exposure that you have to have within investors' portfolios. But I think when you scratch under the surface beyond things like supportive demographics, relatively long-term drivers of economic growth, you get an amazing amount of innovation that's taking place in a very competitive environment. And I think if you can be successful as a company in places like China, you can be successful anywhere. And we've seen that in things like the EV sector, for instance, where Chinese companies really dominate the global market. That's one example, but we see it across other instances where Asian companies are increasingly becoming dominant players in sectors such as technology, machine tools, air conditioning units, solar, EVs I mentioned. So there's a lot of them.
And also in AI, right? In artificial intelligence right now.
Absolutely. AI is a critical area of opportunity. It doesn't come without risks. Obviously, everybody's got very excited, and I think to an extent that's been included into valuations. But when you look at perhaps some of the real sort of players in Asia, in Korea and Taiwan, it's really hard to see beyond their competitive edges in the next few years. They're undoubtedly going to drive and help drive this AI revolution.
Stuart Rumble, thank you so much. It's been a pleasure to have you with us today at Negocios Televisión. Stuart Rumble, director de inversión de Asia-Pacífico de Fidelity, acaba de estar con nosotros con esas claves importantes sobre el mercado financiero actual de Asia-Pacífico. Muchas gracias.